All right, traders, good day. Happy Tuesday to you. How is everyone doing? Welcome back to the New York live trading room session, kicking off our first day of the week. Well, first day here in the New York live room. We did our normal Monday Q&A yesterday. Hey, Duncan. Hey, Antonio. Hey, Orsi. Welcome, welcome, welcome. If you guys are joining over on the live stream on TradingView and YouTube, welcome as well. Something we've been doing starting this year in 2022 is we've been live streaming the first trade that we go through. So we've been calling it the trade of the day. It's not always the best trading opportunity that's on my radar, but one that I think is worth talking about, and it gives you guys an opportunity to kind of experience what this live room environment is and hopefully get some education that will push you forward on your path to becoming a consistently profitable trader. If I didn't see you yesterday, a few updates. We got some upgrades to the tier 1 trading platform, which are pretty cool. If you're anything like me, you're still trying to figure out kind of the changes and what's where, and if you're in a routine of pushing buttons in certain places, they may be moved, but there's a lot more changes coming as well. But Darren and Charles have been doing some great work in the background getting that stuff going. I love the profile feed. I got to make it a habit to actually check it now, instead as I used to never go to my profile, but I like the profile feed where you can kind of get the updates on everything that's relevant to you there. But make sure you play around with that. And we're going to get started today. I feel like I was supposed to say something else, but I forgot what it is. We've got a few hours here, so we'll end up saying it later. But across the board today, you're probably noticing, especially if you go to a yen pair, a massive amount of movement in the market, right? Massive amount of movement, right? We're seeing a lot of yen weakness. We're seeing a lot of dollar strength, really yen weakness due to dollar strength and really the hawkishness that we've had and then kind of stepped back from with the Ukraine and Russia war, then kind of went back into as far as our interest rate hikes, right? Jerome Powell coming out and saying, the 50 basis point spike is back on the table, which is getting the markets excited and not very good for the yen, who has a much looser monetary policy. But you're seeing a lot of directional moves in the market such like this. And the other day, I believe here in the live stream, we talked about correlating pairs. And I said that some of the pairs that are closely correlated, we had some really good discussions on correlations, are the three amigos right here, right? Aussie yen, Canada yen, and New Zealand yen. If you take a look at all of them, Aussie yen, Canada yen, New Zealand yen, right? Would you guys say they almost look identical, at least in recent price movement? Yep. So that's a good example of, again, structuring your portfolio so you're not overexposed in a particular currency. Now, they aren't exactly the same. They are different. There are subtle changes, and we'll look a little bit at that today. But a good example of that. This is also a good example of Duncan. We had a good conversation yesterday in our Q&A session. Duncan brought up basically the idea, or wanted to have some conversations to get some ideas on about really adding to your position in a kind of continuation type of setup. And you'll see that a few of these, Duncan, will have long-term outlooks. I believe the one we're going to look at for the trade of the day is going to have a long-term outlook, and is one where, because we have so much directional opportunity, which isn't always the case in the Forex market, might work perfect for that type of position adding strategy. If you guys didn't see that Q&A, check it out. It's very interesting. Very interesting. So check it out. So let's take a look at, and I forgot which one I wanted to talk about. I think it was New Zealand yen. This one, because this is the one that has, nope, not New Zealand yen. That's straight counter trend. Must have been Canada yen. There we go, Canada yen. Let's take a look at Canada yen. And as always, let's go through our IPDE process. Now, you may need to go out to the weekly. Typically, I don't go out to the weekly. The daily time frame is the highest time frame I go to, but sometimes the market puts in moves. Sometimes you need to get more perspective on what's happening, right? This only shows you a small picture. not very easy to see what the bigger picture is. So sometimes it's worth going out to a higher time frame just to get a lay of the land. And we look at this here and we want to ask ourselves the question, right? This is always the first question that we ask ourselves when we're going through this process of trading, right? I should say this. Here's the one thing I forgot to mention. This is what I want to mention. This is very important. Of course, I would forget the very important thing. So you see movement like this, and what does it scream? Bullish or bearish? Bullish, bearish, or neutral? What would you say? Don't write B, cheaters. What does it scream? Just looking at the chart, not asking you what you want to trade, right? Screaming bullish, bullish, bullish. And this is one of those things, right? Where it's a perfect example, right? My first trading mentor, my first investing mentor, I should say, has taught me this valuable lesson when it came to investing. He said, Akil, by the time you hear about it on the news, it's too late. By the time you hear about it on the news, it's too late. This is one of those deals where after we've gotten this massive bullish move, now you're going to see the news outlets pay attention to it. You're going to see headlines. Yen is weak, dollar strong, sell the yen, sell the yen, sell the yen. And for many newer, rookie, undereducated traders, we tend to have a confirmation bias. And that confirmation bias, isn't necessarily a good or a bad thing. Depends on what you get it from. Like I get a confirmation bias from my analysis on the charts, which is a good confirmation bias, right? If you have a confirmation bias based on quote unquote facts, then you're fine. But most people don't have a confirmation bias. Most newer people don't have a confirmation bias based off facts. They have a confirmation bias based off what they're seeing out there. And out there used to just be the news, because I'm getting older and older as a trader. Confirmation bias these days can be social media. So if you're hearing yen weak, yen weak, yen weak, sell yen, sell yen, sell yen, or these headlines, the yen is by far the weakest currency in comparison to the like those dumb things, right? What is that automatically kind of pushing you to do as a rookie trader? Sell yen, right? Have you guys ever been in that situation where you're watching CNBC and Bloomberg and Reuters and all you hear is yen weakness, dollar strong, and you go into the market and you're like, well, I got to sell the yen. That is a major mistake that many traders make. And they see this move, they say, oh my gosh, we went straight from 89s to 96s, and they buy it up. Now, what's the problem with buying it up right now? Especially if it's just based off that bias. What is the problem in general with being late? And unfortunately, this is why newer traders get taken advantage of, right? Smart money, insiders, institutional traders, whatever you want to call them, they know exactly how newer traders act. Why? Because it's human psychology. It's crowd psychology, right? Humans are pretty predictable. A lot of people are going to be late to the party. A lot of people are going to want to buy it up right now. And what do you think is going to happen when they buy it late? When they buy it after we've already come to a previous level of structure? Are they going to be rewarded, or are they going to be taken advantage of? We got Phil over on YouTube saying the move is done. Yeah. And I would say ... for now. So the thing that you want to do, hey, Phil, by the way, good to see you. Love familiar faces. The thing to do right now is not automatically rush to your keyboard and hit that buy button, or your mouse and click that buy button. It's to analyze the opportunity. It's to ask yourself, where is the next opportunity to buy or sell? And you're going to see multiple opportunities here, but where is the next opportunity? And it's to be patient. It's to wait for the market. If you are a buyer, wait for the market to take down a particular level of structure, if that's what you're waiting for. Wait for the market to give you a little bit of a pause, maybe a little bit of relief, and look for the next opportunity to buy. I'll tell you, we were doing this. I was talking to Cody the other day. Me and Cody, we started investing in oil. I think Cody was before me. We put in some major oil investments mid-2020. I was summer 2020. I don't know if Cody was before me, but I think we looked at this in the live room the other day. You can see the notes still on the chart. But we were looking at oil. And do you guys remember us talking about coming down to this shelf? right? Market gave a little bit of relief. You look for the next opportunity to buy. And we were both eyeballing this level. So opportunities will be there. You got to be patient. You got to pick your spot. Pick your spot. So let's go to the analysis. Let's go to I'll draw some on the weekly and the daily. And let's ask ourselves, where are we at? So the perfect way to do this, I like keeping the crosshairs on my mouse, is I like to look at the highs. I like to draw my little horizontal line in. And that gives me a good idea of where I'm at. Where is market, or what? Where is market? I always talk about it like it's a person. Where is market? Where is Mark? Where is the market currently trading at? Major structure, minor structure, not at structure anymore? What would you guys say there? Yeah, Cody. All right, you got to brag. You were a couple months earlier than me. Yeah. Whatever. Who cares? This is not a blank measuring competition, Cody. Can't we both just be winners? We are both winners massively. But yeah, so we are at a minor level of structure here, right? And the thing that I look at when I'm analyzing this chart is I want to see where we're at, and I want to ultimately see where we can go. And I look at this. Hey, thanks, Trading View. Yep, push all this push from big structure. Yeah, I look at this as two ways because I can trade bullish, I can trade bearish. I look at myself as being like a mercenary in the market. I don't have to trade counter trend. I don't have to trade trend continuation. I could do both. So whenever I look at a situation, I'm looking at it from both ways. If this, then that. If this, then that. And I look at this level of structure. So I am not currently interested in buying at this current level of structure. It is a minor level of structure, but this is an area where that would be a profit target from a previous trade. So if price can hold at this level, and if we go down to the lower time frames, we get signs of reversal, this current level could be a level where we see some relief in the market. And when I say relief, I mean like a minor retracement. So not a full-blown move from here all the way back down to the 70s, but potentially back down to our previous level of structure right here. Excuse me. And that's a pretty darn good area for a counter trend trade. At the same time, if we violate that level, right, if we take out 96 twos, right, well, where would you guys predict that we're likely to go to next? If we can violate that current level of structure that we're trading at. We're all winners if we're making money. You darn right. You're darn right. Antonio says 145, so 145. That's about right. Basically right where I have that line drawn in a little bit lower. This current level of structure, you guys thinking the same thing? We don't need to be super detailed right now because we got some time, but this current level of structure, is that what you guys thinking? If we were to continue higher, I see 101s. I see 1.5 over on YouTube, 98, 98s. So a little bit below that level, the minor part of this level. Yep. So here's the thing. I don't want to say there's no wrong prediction. I guess there is no wrong prediction, but there are better and worse predictions. But yeah, anywhere at that zone higher is a fine prediction. And that zone higher could be, it could be moved up, it could be moved down. You can add other things. You can add a volume indicator to it. You can add Fibonacci extensions, retracements, even handle numbers, right? The same thing we do in the CTS. You can kind of pinpoint that level however you want. The point is, at this point in the process, you want to get in the habit of making a prediction of if this level is broken, then, or violated, then this is where we're likely to go to, because that's going to set up your next trade. And once you have that prediction of where you think price is likely to go to next, now you can actually see if it's a relevant trading opportunity, right? Is there enough room to go there, right? If your prediction is like 2 pips above current structure, probably not worth your time. In this opportunity, you're looking at the minimum, we said, 99s was the smallest one we got. You're looking at a move from basically 96 to 99s. Hell yeah. So you're asking yourself, is this trade worthy of my attention, basically? And if this trade or these trades, because there's multiple ones, are worthy of your attention, that's when you dig into the detail. And that way we're not wasting energy on things that aren't worth it, Real quick question on TradingView: can we see pound yen? We'll look at that later here in the live room. Unfortunately for the live stream here, I only look at one trading opportunity. So we pick one, we dig into it. I shut the live stream off. But if you want to, feel free to join us in the live room. You get access to a London room, New York room as part of your trial membership. Head over to www.tier1trading.com. Check it out, and you can join us for multiple hours every Tuesday, Wednesday, and Thursday. You can look at whatever you want. So let's go down to the lower time frame here. Again, we started on the weekly. Let's go down to a 4-hour. And again, kind of dig into this. So counter trend traders, what you're looking for at this moment, and this pregnant pause may stink a little bit for you. It actually may, see if that is going to end up, that may end up being something on the hourly. But what you're looking for is a sign of reversal, right? So we've come to basically 96 flat. We've probed it. If you are a counter trend trader, the question you need to ask yourself, and by asking yourself, I mean refer to your trading plan, is what do I need to happen at this level in order to predict a reversal? Do I simply need a pin bar and I can enter at market? Do I need a 3-bar reversal? Do I need a double top? Do I need a 2618? Do I need something more complex? Do I need to go down to the hourly and look for a head and shoulders, right? Whatever it is that you need, that's what you're waiting for at this level. If this level is violated, then said trading opportunity is over. On the other hand, if that level is violated, then the question you're asking yourself is, what do I need for a continuation setup? Am I a breakout trader that just can trade next bar market after a breakout? Do I need a pullback? If I need a pullback, what is my specific entry reason after I get the pullback, right? These are all the questions that need to be going through your head right now. And as a newer trader, it could be quite overwhelming. If you're an experienced trader and you're actually live trading, or even demo trading, I should say, all of this should be in your trading plan. So it should be very simple. There should never be the question of, man, if we violate this level, I don't know what I need to happen for me to get long, right? It should be look in trading plan, look in section that says trend continuation trading. Okay, if we get a violation of structure, then wait for price to come back to previous level of resistance that should now act as support. If we come back to previous level of resistance that should act as support, then look for double bottom. If we get double bottom, then look for bullish divergence on the RSI. If we have bullish divergence on the RSI, then enter next bar market. If in trade, then stop. Goes 1 ATR below the low of the double bottom. Targets go at blankety, blankety, blank, right? It should be very methodical. It should be no ifs, ands, or buts, very black or white. You should be robotic in your trading. Right. I don't know if you guys heard the podcast the other day. I was talking about the trader, giving some tips to the trader who's trying to get funded, who is kind of stuck. There's no gray area, right? It's either a good trade or a bad trade. It's no, it was all right trade. It either meets all your rules or it doesn't. It's that simple. If it meets all your rules, you take it. If it doesn't, you don't. Right? There's nothing else other than that. If there is, how are you going to consistently grade yourself as a trader? So, cool opportunity here on dollar Canada, Canada yen, both on the bullish side and the bearish side. Again, there's a lot of yen pairs doing this. This is the one that has room for both counter trend and trend continuation. You'll see a lot of them are just running in the ceilings right now that I guess can ultimately have continuation opportunities, but not as good as this one. Any questions about this setup before we move on to the next pair? Live room members, if you want to type in a pair that you want me to go to, let me know. I've got a lot on my radar. A lot are very similar though, so you're going to hear a lot of repetition today. YouTubers, trading viewers, of course, I'm going to kick you out in a little bit, but if you have any questions, type it in now. And of course, type it in the comment section below. I do read through each and every one. I do answer them. Some of them become Trading Coach Podcast episodes. And if you haven't done so already, hit that like button, smash it, mash it. Show me some love for these free sessions. As I mentioned before in TradingView, we're only looking at one pair here for the live stream. So unfortunately, if you want to kind of do a viewer's request, you got to hop in the actual live trading room and not just the live stream. But you're always welcome. All right.